So one thing that we're often asked in any Natgen trust is the impact of interest rates. With a Natgen Development Trust, they are geared development investments, so typically we borrow between 50 and 60% of the value. So the difference between a investment trust and a development trust is that the debt is actually only out for a fairly short period of time. So we pay cash for the sites, that's the investor capital. Typically the first few draws for the development are also done out of investor capital. So you're about a third the way through the construction before any debt is drawn down. So the part of the process that has debt in it is actually quite compressed. On that basis, the interest rate that we achieve is somewhat less relevant than keeping the timing short. So all our management process is about keeping the time of the debt short, and obviously we seek the best interest rates we can, but it's not the primary motivation for managing debt. Within the Natgen universe, there are a number of different companies that provide various services to make a Natgen Development Trust possible. One of those companies is Littoral Drift Group, called LDG colloquially. Littoral Drift Group is basically our development management arm and provides the development management services for Natgen Development Trusts. Development management is a very important part of the process because that's where we make sure everything is orderly and done within time and within budget. Time slip and budget slip are the two main risks related to the delivery of a development, and thus we need to keep very tight control on both those things. Also, other member companies of the Natgen Group provide other services to Natgen Development Trust and incidentally Natgen Investment Trusts. Those companies are outlined within the information memorandum.